RTC Baijiayun is a stock that sits at the intersection of promise and peril, and deciding whether it's a buy means weighing its technological strengths and strategic ambitions against some blaring financial and market risks. The company, trading under the symbol RTC on the Nasdaq, is a Chinese video-centric technology solutions provider, specializing in SaaS and PaaS platforms, cloud video, AI-powered system solutions, and real-time communications. Its customer roster is impressive, boasting over 2,800 clients including global giants like Apple, BMW, Medtronic, and Roche. Baijiayun's reach spans multiple industries: education, healthcare, finance, automotive, and more, and it's been aggressive about building out R&D centers and partnerships to stay relevant in a rapidly evolving sector. On the innovation front, Baijiayun is not standing still. The company is investing tens of millions of dollars over the next 5 years to build an autism rehabilitation ecosystem, leveraging its expertise in AI and video technology to address a substantial and growing need in China's healthcare landscape. It has also formed strategic collaborations, such as with Beijing's and Lanshan Education Technology, to expand its footprint in education and rehabilitation services. These moves show a willingness to innovate and diversify, which could pay off if the company's bets align with market demand. However, the financials tell a much less encouraging story. Baijiayun's revenue for 2024 was $54.5 million, down sharply from $80.3 million the year before, a 27% drop that signals either increased competition, market saturation, or execution issues. The company's net loss for the trailing 12 months is a staggering $60.4 million, and its net profit margin is deeply negative at -114%. Gross margin is only 20%, which is modest for a tech company, and the company's debt-to-equity ratio is a concerning 64.8%. If you're considering RTC as a buy, you need to be comfortable with high risk and significant uncertainty. The company's strengths are real: a broad and growing customer base, credible partnerships, and a willingness to invest in new markets and technologies. But these positives are overshadowed by persistent losses, shrinking revenue, thin margins, and a precarious balance sheet. The company's ambitious investments like the autism rehabilitation ecosystem could pay off in the long term, but there's no guarantee they will be enough to turn the business around or deliver shareholder value. For speculative investors with a high risk tolerance, RTC might offer an opportunity to bet on a turnaround or a major technological breakthrough. For most investors, though, the risks: financial instability, market volatility, and execution uncertainty are likely to outweigh the potential rewards. Unless you have deep conviction in the company's leadership and strategy, or unique insight into its market trajectory, RTC Baijiayun is not a buy for the average portfolio at this time.